Of course, I did not expect it. I did not expect to get that the all-time high of 20,000 last cycle would be breached. And it certainly implies or makes one think about diminishing returns, which is very well possible. However, yeah, generally I'm not so much focused on the all-time highs and the bottoms, to be honest. I see that as either liquidation events that could go really deep, or FOMO tops like 2013. That was crazy. that jump in I guess it was from 100 to 1,000, 10x in a couple of months.
After a meteoric rise to almost $70,000, many investors and analysts believe that even in the thick of the bear market, Bitcoin would stay above the $20,000 mark. And it did for several weeks, even after tens of billions of dollars got wiped out due to the Terra Luna collapse in May. But we soon breached that important support, and with the FTX collapse, prices have dropped even lower. As of press time, Bitcoin is exchanging hands at $16,509. Despite recovering slightly this week, the crypto asset is still very far from its all-time high. As a result of the continuous decline in Bitcoin prices this year, many have raised the possibility of diminishing returns. As an economic principle, the law of diminishing returns states that as investments in a particular asset or sector increase, the rate of profit from that investment after a certain point cannot continue to increase if other variables remain at a constant. In a recent interview, anonymous Bitcoin analyst PlanB discusses the possibility of this happening with Bitcoin in 2022. The former institutional investor also addresses concerns about the gloomy macro environment impacting Bitcoin prices more than the asset's core fundamentals. He also discusses his price outlook for Bitcoin within the next couple of years. We will now take you to PlanB's interview. But before we do, please take a little time to like this video, subscribe to the channel, and don't forget to drop your comments and observations in the comments section below. Thanks and enjoy the video.
I'm more focused on the average and view the tops and the all-time and the lows as an outlier. Yeah, it could be diminishing returns as well. It certainly would make sense as well, because I mean, the price goes up, but the amount of capital that goes with it on exchanges and that's invested in Bitcoin, it gets really huge, and it's really different if the market cap of Bitcoin is $1 million or 10 million or even 100 million in the early years versus 100 billion or even a trillion last couple of years. So yeah, there is a limited amount of money, and it will not go exponential forever. So there must be natural form of diminishing return. Yeah, first of all, I think that the Fed will pivot at a certain moment. They will continue debasing the money and doing quantitative easing or some other form of printing, quote unquote, because they're creating it and not printing it. Of course, it's digital, but they will go on. And this has been going on since the Romans actually, they debased their currencies, and later on, every ruler, every government has debased their currency. So it's not like 2022 will be the year after thousands of years of debasement that the governments will stop debasing. They will go on. Of course, they will never say that, and they will call it, they'll give it a different name. But right, as soon as the inflation is gone, maybe the war is over, and in fact, we already see prices going down, oil prices and consumer producer prices in Germany go down. So maybe it's over, and I have no doubt that the Fed and the ECB and all the central banks will resume their debasement, and which is exactly why Bitcoin, of course, was made with this predictable supply. But yeah, your question is, again, a very interesting one, and I would say those are the main scenarios. Either there is external macro environment that goes maybe bad and continues to go south, and drags Bitcoin and everything with it, or there is some internal thing, some internal momentum, and maybe the halving cycle is that thing in Bitcoin that will make it go up. And what I can say about that is that through the on-chain analysis, which, by the way, did not see the crash coming. So I know that it's also a model. It's wrong. It's useful, I think, but it's certainly not a magic a silver bullet. But through the on-chain analysis, we can see that all the people that bought at very high prices above 60,000 those people are gone. Those are the people that sold the most in the last year, in this year, in 2022. So those people were looking at a huge loss, of course, which gives some very negative momentum in the Bitcoin market. That negative pressure, if you will, is gone. And the people that bought the Bitcoins from them, they're looking at a buy price of, 16,000, 20,000, maybe 25,000. We're sort of range trading around 20,000 for the last half year. So that's a very large part of the market bought around 20,000, plus or minus 5,000. And that gives totally different pressures in this small Bitcoin investment system. Those people have the time. Those people are not sitting at huge losses. And I remember that very well because my first Bitcoin I bought in 2015 when we just came out of that bear market. So it had been oscillating around 200, and then all of a sudden it jumped to 300, 400. And that was the moment I knew it's not that. It's not that, and it will continue. Mm-hmm. I guess everybody is, including myself, is waiting for that moment that we see it's not dead and that it still has some life. But once we see that going on, then all those people that bought the last 6 months will be in profit, and Bitcoin will have his own momentum in this maybe deteriorating macro environment. So in the end, of course, macro influences Bitcoin. We've seen that last year. But in the end, I think the internal dynamics of Bitcoin with a limited supply, which is the only asset with a limited supply like that. Of course, gold has limited supply as well, but Bitcoin is beyond gold in scarcity terms. I think that has a dynamic of its own. And it will be very interesting to see that playing out next 1, 2, or 3 years.
Another concern is the possibility of Bitcoin dropping even lower before the bear market ends. For example, technical analyst Gareth Soloway has a $3,500 worst-case scenario price prediction for Bitcoin. At best, Soloway believes Bitcoin will drop to around $13,000 sometime within the next 5 to 6 months. Though he doesn't believe it would come to that, PlanB discusses the possibility that the crypto asset drops to such lows. He also draws similarities between where we are currently and the end of previous bear markets. Here's another clip from the interview.
Of course, Bitcoin can go down. I know there's people waiting for 14,000, which is, of course, minus 80% from the 70,000 high, which all bear markets seem to have reached. Minus 80% from 70,000 is 14,000. And then there is a group that's waiting for 10,000, which is 85% from the top. All possible. I don't think it will happen, but it is possible. What I think will happen is that we will see a bottom somewhere next couple of months. The bear market of 2018 and 19 was about 6 months. We're obviously in 6 months now. Maybe this will take longer. Maybe this will be like 2015, where it took like 9 months, I guess. So that would mean like 3, maybe 4 months of sideways with some up and down, but mainly sideways. And then I guess the force of the halving and the force of all the people that have sold with a loss and the new buyers that have bought at a very attractive price, that dynamic and the halving on the radar, that will come into play. And so I could see a steady rise and a start of the bull market. It was sort of going up again and above it looked like it was over. And of course, we all hope that. And on the other side of the argument, there were people that said, hey, but the short-term holder, the 5-month realized is not yet below the realized. So we have to wait for that. And of course, that group got it right, and that's what we're seeing right now. So it's not even a model. This is just historic data. It gives you some situational awareness, but it does not guarantee anything, and it does not mean that the history will repeat itself. What it really does tell you, in my opinion, is what we have been talking about, that this very specific dynamic within Bitcoin, that people that bought very high at a high price, so let's say above 60,000, they really moved the realized cost price up. And when they sell to buyers at a lower price, so they sell at a loss, that of course lowers the cost price as well. So the fact that the short-term holder price is below the realized price, it also means that those buyers at high levels are indeed gone, and that pressure is also gone. So there's no people with large losses. Most people are now sitting around the level that they bought, a little under maybe right now because we're really low at 16,000, but not that bad. So everybody is sort of betting on this scenario of, well, this is the bottom, or at least in the next couple of months, and not sitting at a loss or having margin calls or liquidation pressure or all that kind of stuff.
Since he made 3 almost accurate Bitcoin price predictions in 2021, PlanB has become a household name in the crypto community on Twitter. Though he has enjoyed reduced popularity in recent times, his approach to Bitcoin analysis and core fundamentals is still quite admirable. What do you think about PlanB's interview? Please drop your thoughts, comments, and observations in the comments section below. Also, ensure you've hit the like button, subscribe, and check out our other crypto-related videos. Thanks for watching.